If you're someone who receives stock and option compensation from your employer and you're not sure the best way to manage it, you're not alone. But first, congratulations, because this can be a great way to build wealth and help you achieve your financial goals for the future. However, this form of compensation does carry additional risks that you want to be mindful of. Some of these primary risks that exist are things like stock price fluctuation, employment changes, additional tax liability, just to name a few. And to manage these risks, there are several key considerations that you want to be thinking about before making any well-informed decision. And often many of these are things your employer didn't tell you about, or maybe you're just not aware of. So today what I want to do is give you 5 things that hopefully will help answer some of these questions and perhaps open the door to things to keep in mind for the future. The first thing is around forfeit value. What this is going to look at is just trying to understand the loss of your stock and option compensation should you leave the company, let's say, prior to retirement or before some of your stocks units are fully vested. The second is leverage. This looks at a lot of the value of your compensation and does a lot of hypothetical analysis for upside and downside outcomes and helps you just understand what the potential might be as well as what the risk you might be carrying with those holdings. The third item is option insight ratios. This is just a fancy term to help you understand how does the current value of your holdings, from some of your stock or option shares, as a percentage of their full value. And what that'll do is help give you maybe an area of priority in terms of what you might want to exercise, let's say, or sell, and maybe urgency because of deadlines for calendar year, expiration, and for tax purposes as well. The fourth item is concentration. Concentration is just going to look at essentially all your stock and option holdings and understand how it looks relative to, let's say, other investments you have outside of these holdings, like your 401k, your brokerage account, or something else. And it helps you identify perhaps where you might be too heavily concentrated in your company. The fifth item is financial goal attainment. What this is going to look at is just where are you at in achieving your goals, whether it's for something in the interim or maybe retirement or something else. And what that'll also help you do is understand is should you take some risk off the table with maybe some of your that stock and option compensation, or maybe you can take a little bit more risk by letting them be invested longer. As you can tell, equity compensation can be pretty complicated in terms of making the right decision. And it's something that, again, your employer may not tell you about. And so you're encouraged, I think, to go out and find the most information possible to make the best informed decision, just so you feel confident and have conviction in anything you decide upon for the future. I know there's a lot more here, but hopefully that's helpful. I want to thank you for the time today. As always, we're here to help, and I look forward to talking to you soon. Take care. Bye-bye.